Okay, day 4 of the 21-day property investors course for 2022 and 2023. We're looking at the BRRR strategy. Now, the BRRR strategy was made popular by Bigger Pockets, and if you haven't checked out Bigger Pockets, it's this massive American site, biggerpockets.com. It's a YouTube channel, it's a podcast, it's all things awesome about property investing, and they got heaps of case studies, a lot of successful investors, how they started, what they're doing now. So if you're listening to podcasts, make sure you listen to Bigger Pockets. They got a lot of good calculators online, and the video series around the BRRR strategy, it's great. So what is BRRR? It is buy, renovate, rent out, refinance, and repeat. Now, if you're looking to go from, say, 1 property to 10 properties, you're going to want to recycle your deposit equity. And that's what the BRRR strategy is all about. So if we go through the stages, if you're wanting to build up a bigger portfolio, you're going to have to buy well. What does buy well mean? It means at a discount. Now, you're going to have to see properties that are worth, say, 800,000, and you've got to start making offers around the 700k mark and to see what sticks. Your offers might be 10, 20, 25% below what the agent is expecting and telling the vendor they're going to get. But if you're making enough offers every week, every month, every year, if you made 100 offers a year and only one of them was accepted, but it was 25% below the perceived market value, and you were able to pick up that property, I think you'd be pretty happy. Now, if it takes you half an hour a week to look at a listing, submit a sale and purchase agreement, and you made one of those offers every week, you're talking about less than 30 hours for a year to get a 25% discount on a property. So this is the kind of thing that when you understand the BRRR strategy and you're able to make steps to buy well, that's when you can repeat the process. That's what catches a lot of people out. So instead of getting 2 properties in your portfolio, if you BRRR well, you can get to this 10 number. A lot of people say they want to own 5 or 10 properties. This is the simple way that you can do it. Now, the renovations, you've got to figure out how to get bang for your buck, because you're probably not going to have unlimited cash. So you've got to figure out what increases the yield, what's going to increase the capital gains. Things like adding bedrooms, adding parking, adding storage, fixing the street appeal, and even, it's not even lightly recommended, don't worry about a property manager at the start. Reduce your costs, spend as little as you possibly can, get the biggest uplift so that you can repeat the process. So if you're not a renovations expert, consider partnering with someone that does understand the renovations really well, because if you're doing the BRRR strategy from the beginning, you might end up having to do a lot of this stuff yourself. So jump on Mitre 10 or Bunnings and learn some of the stuff online, especially if your average hourly rate or your income is just not high enough that it's worth doing a lot of the stuff yourself. Now, the rental income is really, really important for your borrowing power. So even though you might find like a nice family that you want to rent it out for $480 a week, if you can get $520 a week and you want to, that $40 difference is actually going to make a really big difference on your borrowing power and your ability to keep refinancing and pulling your equity out. And if you want to max out and build a big portfolio, you really, really got to focus on getting high rental yield, and you don't want to get to a stage where you've got 10% vacancy, for example. Now, refinancing, when the interest rates are going up, that makes refinancing a little bit harder because the serviceability of your loans, your borrowing power is going down. And that's where it's really important to consider your options of non-bank lenders or specialist mortgage lenders, or adding in other borrowers. Even though you're giving away some of the gain, some of the equity, what you're doing is you're allowing yourself to repeat the process more often. And this is the key thing. BRRR is a strategy that's focused on keeping the property. That's why it's refinance, not sell. Now, a lot of people say they want to trade or flip properties, and there's strong arguments that suggest that people that do trades and they make marginal, 30, 40k profits on those trades, and they do it for 10 years, they actually just make the same amount of money or even less than people that buy and hold. And that's the key thing with this BRRRR strategy. It's buy and hold until you get to a stage where you actually just can't. And that's not a month or 2 months, that might be a year or 2 years. So when you're buy and hold and you're building up your equity again, it might be that you're doing 5 BRRRRs in 10 years and you're holding all of them, or maybe you're doing a BRRRR and then a trade or a flip, and then a BRRRR and a trade and a flip, and trying to make it so that you actually do get to those 10 properties in 10 or 20 years time, instead of just doing trades and flips and then in 10, 20 years time you've actually only got 2 or 3 properties. So if you want more information on the BRRRR strategy, check out the links with Blandon's video. Last time I checked, there was well over 15,000 views on that, and that goes through BRRRR in a lot more detail. Any questions? Let us know in the comments.